Now guys, let's do the SP 500 technical analysis on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. So now let's do the technical analysis on this, the weekly chart. So first comes the candle itself. So when we look into the candle, it's an inverted hammer. What is it? It is an inverted hammer. In the week of August 8th, it was moving up. Then in the week of August 15th, it came down. And now because of these two candles, we will look into that what is going to happen in the week of August 22nd, 2022. Because there is an inverted hammer, number one, inverted hammer. Number two, because the closing is below the boundary of the Ichimoku. Number three, because the closing is below the zone of 4291, the golden resistance. This is the golden resistance. This is what I have mentioned clearly in my previous weekly technical analysis. That 4291 or the zone of 4291 is the golden resistance, golden zone. So because the number one is the candle, a bearish hammer. Number two, closing below, this is the Ichimoku cloud, the boundary of the Ichimoku cloud. Number three, closing below and the rejection from the 4291. These three things means it is bearish. Means overall there are bearish sentiments in the stock market. But that does not mean that on Monday, on 22nd of August 2022, on Monday, you will see a very heavy fall. This may or may not happen. It depends on multiple factors that we are going to look into when we will be deducing the probable movement, when we will be doing the daily analysis. But as of now, it is clear that technically the S&P 500 is holding and it is showing bearish sentiments because of the rejection from these two important levels, and third one is the candle itself, right? Now let's look into the technical indicators. First comes the Bollinger Bands. This is the upper band of the Bollinger Band, this is the median of the Bollinger Band. This means that, and because the closing of the candle is in between the upper band and the median, this means that the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages. Now moving averages, if you look into the pattern of the moving averages, there is a clear fan out supporting the bear trend. This is not the bull trend, this is the bear trend. This fan out is supporting the bear trend. But because the S&P 500 has closed above the all of the moving averages, this means that the S&P 500 is bullish through the moving averages. Now there is a point of conflict because the pattern of the moving averages is saying it is bearish, clearly bearish, and the closing is saying that it is bullish. This means that through moving averages, the S&P 500 is neutral. Then comes the Ichimoku cloud. If you see that because the closing of the candle was below the Ichimoku cloud, now once again it is bearish. So we have Ichimoku cloud bearish, moving averages neutral, and this particularly the Bollinger Band, it is bullish. Okay. Now let's see some other technical indicators. So first comes this the MACD. If you look into the MACD is more than the signal. This means that it is directionally it is bullish. But because both the MACD and the signal are negative, this means that on the broader chart, on the broader scale, it is bearish. But as of now, directionally it is bullish. Then comes the stochastic RSI. Stochastic RSI, and this is what I told you last week, that because the last week the K channel was 100 and the D channel was 95.51, I told you that it is overheated and a reversal will be there. It will be there, even though you can see that the market manipulators, they are trying to move it up, but because whenever they try to move it up, both the K and D will become 100, saturated, overheated, and in that case the technicals will compel, the technicals will force the market, the S&P 500 to come down, and the same thing has happened. Now if you see in this week, the K channel is 97 and the D channel is 99. This means that even a slightest upward movement will again saturate the K and the D channel, that will be 100 each, and whenever it will become 100, that means again a reversal. Okay, so whenever we see that on the weekly chart, especially on the weekly chart, if the stochastic RSI, the channels of the stochastic RSI are saturated and overheated, in that case the market, whenever whether it is the S&P 500 or the Dow Jones or the Nasdaq or any other index, it has to come down. It has to come down. And whenever the stochastic RSI, the channels are 0 and 0, in that case there comes a bullish reversal, because that is the bear trend. Okay, so this means vice versa. So whenever the channels are saturated, whether it is 0 or 100, there will be a reversal for sure. This is clear, and this is what we have seen historically, and that was the reason I told you that even if the market manipulators, they try to move it up, it will fail and it will come down, because the channels will be saturated, the channels will be overheated. Now, as of now, what is happening? The stochastic RSI, the K and D, both are below 100. One is 97 and the other one is 99. This means even a slightest upward movement will again saturate this channel. That also means that just for one day, that will, so that may be like Monday or that may be like Tuesday. Okay, you can see an upward movement or maybe a short reversal, an intraday reversal. So when I say upward movement, this will be an intraday movement. So you are seeing that at first, immediately upon open, okay, the market has, means the S&P 500, it has moved up. Then after 15 minutes or after 1 hour, okay, it has then it came down. So that is the intraday. That is the intraday movement. First it moved up and then it gave up and then it come down. Okay. So as of now, the stochastic RSI is also bullish. Then we look into the divergence. So divergence is normal, not a problem. Then we look into the volatility. Volatility is still like, it is 90% of the all-time high levels. So volatile, this means that still there is very heavy volatility on the weekly chart. So now what we have seen on the weekly chart is that MACD is bullish, stochastic RSI is bullish, the Bollinger Bands are bullish, the moving averages are neutral, and the Ichimoku is bearish. This means that there is still a bull trend on the weekly chart, but this is not a strong bull trend, rather it is a weak bull trend. Why weak? Because a rejection from this, the Ichimoku cloud, bearish from this, the Ichimoku cloud, secondly a rejection from the 4291, the third one the candle itself, and then we have the neutral moving averages. So it is bullish, but it is weak bullish. Okay, so just one more bear candle, and then this is it, then everything will be bearish. So this thing is clear. Now let's move on to the daily chart. To see what is going to happen in the S&P 500 on Monday, that is August 22nd, 2022, then Tuesday, August 23rd, 2022, Wednesday, August 24th, 2022, Thursday, August 25th, 2022, and Friday, that will be the weekly expiry. So Friday, August 26th, 2022. So we will deduce the probable movement of the S&P 500 index after the technical analysis on the daily chart. So let's move on to the daily chart of S&P 500. Guys, now we are on the daily chart of S&P 500. So first let me write it down. This is the daily chart of S&P 500. So before I do the technical analysis on this, the daily chart for this, the S&P 500, let me tell you about these, the support and resistance levels. So first of all, we have this, the 4291, this the 4291. So 4291 is the mean price, it is the mean level, and then we have the zone of 4291. So the zone of 4291, we have 4280 from this is from 4280 to 4300. This is the restricted zone of the 4291, and there is an NS zone of the 4291, that is again from 4280 or 4275 to 4316 or 4318. So you can say 16. Okay. Now because there were 5 rejections from the zone of 4291, this means 4291 is a very strong zone, and now any upward movement will again be restricted by the 4291. After 4291, then we have the next resistance at 4265, and this was the thing that I've told my members very well in advance, not just on this the 19th of August, but on the 18th of August itself, that whenever there comes a gap down open in such a situation, then immediately upon gap down open there comes a fall. Means there won't be any upward movement. The open will be the high and then there will be an immediate fall. Then comes the next one at 4237 or 4235, you can say, or 4237, next resistance or the immediate resistance 4237. Then comes the next support at 4207 or 4210. Then comes a very good support at 4185. So what is 4185? 4185 is our calculated support, very good support. And earlier the 4185 was also the 200-day EMA, exponential moving average. So exponential moving average at 4185 and our resistance at 4185. And that was the reason I told you that whenever the S&P 500 it moves up and hits the 200-day moving average or our resistance at 4185, there will be a fall. It will not be able to breach. Now after 4185, then comes the next support at 4150. Then comes the next support at 4110. Then comes the next support at 4065. Then comes a very good support at 4035. So as I mentioned in the beginning of the video that earlier S&P 500 was not supposed to breach the 4035. It breached the 4035 only and only because of the manipulation, because of the verbal comments from the Fed chairman on July 27. Nothing else, no technicals, nothing else. So as of now, for the coming week, that is from the August 22nd, 2022 to August 26, 2022, let's keep it from 4291 to 4035. This means that any fall from this level to 4035 will be approximately 4.5% loss to the S&P 500. So guys, these are the support and resistance levels. Now there is one more thing about this, the 200-day moving average. If you see that this is the 200-day EMA. Okay, so whenever the S&P 500 it comes down, it will find support at 200-day EMA. I'm not saying there will be a reversal. I'm saying that whenever it comes down, it hits the 200-day moving average for a moment, for 5 minutes, 10, 15 minutes, 1 hour, 2 hours, it can hold, or it can show that, see, I am holding here. But a second or the third breach will simply say that it is not going to hold and it is coming down. Now guys, as you have seen the accuracy of the weekly technical analysis, and if you want to get the daily analysis of the S&P 500 that is exclusively for the members, then you can join my YouTube community. So this is my YouTube channel page. I have given the link in the description and also in the comment section. All you need to do is to click on the join button. So once you click on the join button, then this pop-up will open, and in this pop-up you will be getting these two options only: one midweek update per week and all midweek updates per week. So accordingly, after paying a nominal fee, you can join the YouTube membership, the YouTube community, and you will get the daily updates. The daily updates, not just one time but 2, 3, 4 or 5 times, the daily updates. So the daily updates through the videos and the notes that what is going to happen in the S&P 500 in next 4 hours or in the entire day, what will happen tomorrow, whether there will be the gap up open or whether there will be the gap down open, everything on the daily basis you will get after joining this channel. So I've given the link in the description and also in the comment section. So whenever you want to join, you can join. So guys, if you see, there are many members who have joined the all midweek updates. So these are the many members who have joined the all midweek updates. So guys, whenever you want to join, I have given the link in the description and also in the comment section, and you are welcome. Now guys, we have seen the support and resistance levels. Now let's do the S&P 500 technical analysis on the daily chart. And after the technical analysis, then we will deduce the probable movement of the S&P 500 for the coming week. That is from August 22nd, 2022 Monday to August 26, 2022 Friday. Now first comes the candle. If you look into this, the last candle, it is a heavy bearish candle. Now this heavy bearish candle, it simply means there are bearish sentiments in the market, in the stock market, in the S&P 500, because this candle was formed on Friday. So, and the Friday was the weekly closing. This means that this clearly means that there are bearish sentiments on the closing basis on Friday, right? Now first comes the Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed between the upper band and the median of the Bollinger Band, this means the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages. If you see, there is a clear fan out in the moving averages. Secondly, the S&P 500 was able to close above all of the moving averages. This means through moving averages, S&P 500 is bullish. Then comes the Ichimoku. Because the S&P 500 is trading above the Ichimoku, this means the S&P 500 is bullish. Then comes some other technical indicators. If you look into the MACD after July, June, so almost after 2 months, now the MACD looks like MACD is going to change its direction. If you look into the numbers, then MACD is 86 and the signal is 82. MACD is 86 and the signal is 82. This means just one more bear candle on Monday and the MACD will become bearish, right? So as of now, technically MACD is bullish because the MACD is 86 and the signal is 82. Okay, so marginally up. And other than that, if you look into the momentum, the bullish momentum, it is fading up, right? Then comes the stochastic RSI. Stochastic RSI clearly bearish. K channel is less than the D channel and the K channel is less than 50, clearly bearish. Then comes the divergence. Earlier the divergence was increasing. So this divergence is in the closing prices of the candles. So earlier the divergence was increasing, but because of these three candles, the divergence has come down. So divergence is normal. Then comes the volatility. Volatility is normal. This means that through all of the technical indicators, what we have seen is that the moving averages are bullish, the Bollinger Bands bullish, Ichimoku bullish, MACD is marginally bullish, and the stochastic RSI is bearish. All other are bullish, but the stochastic RSI is bearish, clearly bearish. Now what it means? If you have subscribed to my channel and watching my technical analysis for last many months, then you know. And guys, yes, there is one more thing. If you haven't subscribed to my channel, then please subscribe to this channel and click on the bell notification icon so that you can get the timely updates of the weekly technical analysis. So I was saying that if you have subscribed and if you are watching my previous technical analysis for last many months or weeks, then you know that I have mentioned this thing many times. Whenever the MACD and the stochastic RSI are in the same direction, are following the same direction, in that case, that particular direction will be the direction of the stock market, of the index, whether it is S&P 500, whether it is Dow Jones, whether it is Nasdaq. And if both of these, the MACD and the stochastic RSI, if they do not follow each other, in that case, what will happen? In that case, there will be a dilemma in the stock market, in the index, S&P 500, Nasdaq, or the Dow Jones. And in that case, what will happen? Whatever is the trend, whatever is the movement of the market, whatever is the movement of the index will follow that particular movement or will give some movement in order to bring the MACD and the stochastic RSI in the same direction, either this direction or this direction, so that the index or the stock market can get a defined direction, right? As of now, what is happening is that unlike last week both the MACD and the stochastic RSI both were bullish and it was moving up. But now in this week, stochastic RSI is clearly bearish and the MACD is just marginally bullish. This means just one more candle, just one more bear candle, and both MACD and the stochastic RSI will be in the bear direction, and then that direction will be the direction of the stock market, the direction of the S&P 500, and the direction of the other indices. Now, after analyzing all of these, the technical indicators, what we have seen that all of the technical indicators are bullish except the stochastic RSI, right? Except the stochastic RSI. This means that yes, technically the S&P 500 is bullish, but this is not strong bullish, this is again weak bullish. So until and unless either the MACD changes direction from the bulls to bears, that it has already changed on the 4-hourly chart, or the stochastic RSI changes its direction from bear to bullish, okay, we will not say that it is bullish or bearish. So as of now, the only thing we can say that the S&P 500 it is bullish, but it is weak bullish. It is weak bullish because all technicals are not supporting the bull trend. And the same thing we have seen on the weekly chart, that on the weekly chart also the S&P 500 was weak bullish, right? So the weekly chart, the daily chart, the S&P 500 it is weak bullish. Now guys, let's deduce the probable movement of the S&P 500 index, that what is going to happen in the S&P 500 index. So guys, before I deduce the probable movement of the S&P 500, we need to look into one more index. This is the Nasdaq. This is the Nasdaq, okay, and the symbol is IXIC. Nasdaq Composite Index. This is the Nasdaq Composite Index. Now, why we are looking into the Nasdaq Composite Index? Because sometimes Nasdaq gives an early indication about the what is going to happen in the overall stock market. The Nasdaq, it is a small index. S&P 500 and the Dow Jones are the big indices. So Nasdaq is an early indicator, not always, but sometimes it is an early indicator, and it tells us that what is going to happen in the S&P 500 and the Dow Jones. So now what we are looking for here in this, the Nasdaq is, Nasdaq Composite Index is, and this is the same thing that I've told my community members, that if the closing comes below 12,770, 12,770, in that case the technicals will change in the Nasdaq, and it is an early indication of a bearish trend in the overall stock market. So now let me show you, okay, this particular thing. Number one, that the closing of the candle was below the moving average. Closing of the candle was below the moving average. Okay, this itself is a confirmation that now moving average is conflicted, means moving average is neutral. In case of this, the S&P 500, what we have seen that the closing of the S&P 500 was above the moving average and it was bullish. But in case of this, the Nasdaq, the closing is below the moving average. That is why it is now going to act as neutral, neither bullish nor bearish. Okay, that is the first thing. Second thing is that the closing was below the 200-day moving average, 200-day EMA, again bearish sentiments. Third thing, number three, the MACD confirmed crossover in the MACD after 2 months. So the MACD is 318, and the signal is 327. So now signal is more than the MACD. This has happened almost after 2 months. There is a confirmed change in the MACD in case of the Nasdaq Composite Index. Now, other than that, we can clearly see the bear momentum, the bearish momentum. This is the red, the bearish momentum. And if you see, the last time we have seen it was in the month of June, 16th of June, and then after 23rd of June, everything was bearish. After 23rd of June, everything was bullish. Now on 19th of August, this means there are bearish sentiments in the S&P 500 index, right? Then comes the stochastic RSI. If you see, stochastic RSI is heavily bearish. Why? K channel is less than the D channel. That's okay. But both K and D are less than 50. This is bearish. Now, because the MACD is bearish, the stochastic RSI is bearish, and this is what I told you. Whenever the stochastic and MACD, whenever the stochastic RSI and the MACD, they follow a particular direction, that is the direction of the market. That is the direction of the stock market. And this is the reason why I have shown you this, the chart of the Nasdaq Composite Index, right? So now based on this, the Nasdaq Composite Index, now we will look into the probable movement of the S&P 500 index. Now, so first thing is that now we know that because of this, the Nasdaq Composite Index, now we know that there is an early indication. There is an early indication of this, the bearish trend in the overall stock market, means a reversal in the stock market. Clear? Now on Monday, as of now, we are not sure whether there will be a gap up open or the gap down open, but last week I told you that for the previous week, okay, that was the Monday, August 15th, I told you that irrespective of the open, it will move up. So last week it was clear. it was clear. But this week, okay, it is not as it is not that much clear. That is the reason why I'm not saying it will be a gap up open or the gap down open. Okay, but historically what we have seen is that whenever such a situation is seen, a rejection, a heavy rejection from a very critical zone, and whenever there comes a very heavy candle, then oftentimes we see a gap down open. I repeat, oftentimes, not always, but oftentimes we see a gap down open. Immediately upon the gap down open, there comes a bearish movement in the stock market. Right? This is what I'm telling you based on the historical data, based on the historical movement. So this may or may not happen, but there are chances. There are good chances that this will happen based on the historical data. Okay. So do not consider it as this thing as an advice or something that I'm telling you that 100% this will happen. No, I'm simply saying based on the historical data, many a times, not always, but many a times, this is what happens. There comes a gap down open, and then the market, it comes down. In this case, this is the SP500. So SP500, it will come down. Secondly, what we have seen is that irrespective of the open, again there comes this the downward movement in the index, in the S&P 500 index, right? So this means that if there comes an open, okay, whether it's a gap up open or a gap down open, we can expect a bearish movement. Now let's talk about the first scenario. The first scenario based on this, the movement. So whenever there comes a open, a gap down open, okay, or a flat open, or maybe a gap up open, and whenever the S&P 500 index, it comes down, then what will happen? It will come down, and first it will hit the 4207 or the 4210. Okay. Now because earlier this 4207 and 4210 has provided some good support for the S&P 500, this means that after hitting this level 4207 or 4210, we can see an immediate reversal, right? Because earlier it has proven a good support. Now whenever it will reverse, then the 4237 will act as a strong resistance. Okay, why? Historically we have seen. Secondly, if you see the movement of the S&P 500 yesterday on August 19, that what we have seen, that most of the time it was trying to hold around 4237. This means 4237 itself, it is going to act as a good resistance. This means that after hitting the 4237, then we can anticipate a further fall in the S&P 500. And guys, remember, this is the first scenario we are talking about. Okay, and this is the most likely scenario. Now whenever the second time it comes down, then it will breach the 4207 or 4210, and if it breaches the 4207 or 4210 in the first time also, then it will come towards the 200-day EMA. 200-day EMA now is at 4190. Then we have 4185. So we have 4185 and we have 4190. So 4185 is our resistance, our calculated support, and 4190 is the 200-day moving average. Then this is the resistance 4291. This is the golden resistance 4291, or the zone of the golden resistance. 4291, golden zone of the golden zone of this, the golden resistance. Okay, 4291. So whenever it comes down, then we have the 4185, 4190. It will hit, and then it will find some good support. And because and see, until and unless there is very heavy selling, the 4185 and the 4190 is going to act as a good support for the S&P 500. This means the reversal that we were talking about earlier from here, that reversal we can now anticipate from this level, right? So what will happen, that S&P 500 will try to hold above the 4190 above, or in simple terms, the S&P 500 will try to hold above the 200-day EMA. In simple words, that's it. Okay, so this is what we are anticipating on this the Monday. Okay, on Monday also, this the blue moving average, it will be around 4174. On 19th of August, it was 4162, 4155 and 62. So it will be around 4170, 4171. Okay, not around here. So now if the S&P 500 is able to hold above or around 4190 on Monday, on August 22nd, 2022, then on Tuesday, on August 23rd, 23rd 2022, what will happen? It will again try to hold, but on Tuesday, on August 23rd 2022, this blue moving average will also be there, okay, at or around this at 4190 or 4185. So it can hold, means the S&P 500, the SP500 can hold on Monday and Tuesday, but eventually what will happen? That is something that we need to look into the MACD. What will happen? On Monday, if it comes down and if it is able to hold above the 4190, then the MACD will become bearish. And because then the MACD and the stochastic RSI both will be bearish, then on Tuesday, on August 23rd 2022, on Tuesday, we can see a bear movement, a downward movement in the S&P 500 index, because the sentiments are already bearish. Then on Monday, a bearish candle will again create the bearish sentiments, and then on Tuesday it will come down, and again if it is for some reason, if it is able to hold on Tuesday, then on Wednesday it will come down, because it cannot hold for that long, for 1 day or 2 days, or so it cannot hold. See, it can hold only for 1 day, or at most 2 days, but not more than that. Now whenever it comes down, so let's say it comes down on Tuesday, on August 23rd 2022, it comes down, okay, or Wednesday on August 24th 2022 it comes down, then it will find support at 4150. Now 4150 will provide a very good support for the S&P 500, because earlier the 4150 has acted, or it has acted as a good resistance for the S&P 500. Okay, this means 4150 will provide a good support for the S&P 500. A breach of the 4150 will then bring it down to 4110. 4110 is a very strong support, more than this, the 4150. So 4110 is much more stronger than the 4150. Okay, because earlier there was a confluence zone, earlier it was able to support, and it was able to find support and everything else. So 4110. Then comes the next support at 4065. So 4065, it is not a strong support. Okay, so it can come down and it can find just a support like 5 minutes, 15 minutes, that's it. But again, it will be able to breach this support. Okay, and then it will be able to come and hit the 4035. This is a very strong support, and this is, earlier this was a very strong resistance, and I was telling you in the month of June, in the month of May, June, that and also in the month of July, that whatever happens, the S&P 500 will not be able to breach the 4035 until and unless there comes a very heavy manipulation. Other than that, technicals will never support a breach of 4035. So this is how we are anticipating the movement of the S&P 500 in the coming week. Okay, and this is the first scenario when this thing happens. Okay, when it comes down, and this is the most likely scenario, right? Now comes the second scenario. Now what will be the second scenario? The second scenario is that on Monday, irrespective of the open, the movement is bullish, because see, the closing of the S&P 500 on 19th of August, it was just above the moving average. It was able to hold above the moving average. This means that if on Monday, irrespective of the open, okay, the downward or the upward movement, if the closing is above the moving average, that's the second time. So this moving average as of now, okay, it is it is around 4218. Okay, so on Monday, this moving average will be around 4221. Okay, or around 4221. So if the closing on Monday is above the 4221, in that case, what will happen? In that case, this the MACD that we are anticipating that it will be bearish, then the chances are it may not be bearish. Okay, number one. Number two, because there will be a second closing above all of the moving averages, then the S&P 500 will be able to hold. See, what can happen, that immediately upon open it can give you the downward movement. That's not a problem. Okay, normal. But then thereafter, okay, intraday there comes a retrace. Whenever there comes a retrace and it is able to close above the EMA. Okay, In that case, what will happen? The MACD will not change its sign. Secondly, the closing will be considered above all of the moving averages. So that will simply bring back the bulls into the picture. Okay. Secondly, one more thing that will happen is that there will be a little bit change, not heavy change, but a little bit change in the stochastic RSI. Okay, but that change will not be significant. So, so on second day on Monday, means on Monday on August 22nd, 2022, if this happens, and if the S&P 500 is able to hold above this the moving average, in that case, so there will be the bullish sentiments. Okay, the bullish sentiments will resurface. Now, what will happen? So, what will be the impact of this kind of candle that is on this the Monday? So, what will be the impact of this kind of candle for the rest of the days, that Tuesday, Wednesday, Thursday, and Friday? Then we look into the Tuesday. So, like what is happening on Tuesday? If on Tuesday, if there comes another support means if the S&P 500 is again surprisingly, if it is able to support or if it is able to hold above this the moving average on Tuesday also, in that case we need to look into each and everything again to see whether the S&P 500 is really going to be bearish, or it is now gaining its, or it is now regaining its short-term bull movement. Okay, so on Monday, the picture will be quite clear, but on Tuesday the picture will be very much clear whether it is going bearish or bullish. So if you are a member of my group, my YouTube community, then I will update you through the video update and also through the community notes that what is happening, what will happen, etc. Okay, so you need not to worry about this the movement and all. So this was the second scenario. And guys, one more thing, that any upward movement will be restricted by the zone of 4291, will be restricted by the 4265, 4237, etc. Okay. Now, the chances of seeing this the second scenario, okay, or a manipulated scenario, that is the third, that is the third scenario, the manipulated scenario. So as of now, I'm not going to discuss the manipulated scenario, the third scenario, manipulated scenario. The reason is that we have already seen the manipulation here in the previous week, and with this the manipulation, what has happened is that the manipulators, they were able to trap these the retail traders. Okay, they have solved their purpose, and then they have sold on August 19th. Okay, and now still now guys, yes, there is one more important thing. These the manipulators, these the big ones, the big players, they still have a very heavy volume with them that they want to sell. Okay, so this is whatever you are seeing, this is not the heavy volume. This is not the heavy volume. Okay, they still have some very heavy volume that they want to sell. In that case, what they can do, that yes, on Monday or Tuesday, okay, they can give you a short upward movement, in order to trap more retail traders, so that they can gain more volume, and then they can again give this the bearish movement to the S&P 500 by selling heavily. Okay, so this is the third scenario. Now the question is that why these the big ones are selling, why these the manipulators they are selling. The reason is that there was an update. Okay, this is the FOMC. Okay, this is the update from the Feds, and the Feds have said that they are going to raise the interest rates. They are not looking into the cuts. So they are not going to cut the interest rate down. They are not going to bring the interest rate down. Rather, they are going to raise. So the cutting of the interest rate, it is as of now, okay, for a few months, it is out of the picture. They will be continuously raising the interest rates aggressively. Earlier, this heavy movement on July 27th, this was July 27, July 28, July 29. So this was because the Fed chairman, there was one comment from the Fed chairman that he has said that we will be looking into the data, and if the data will say that everything is normalizing, then we can think about pausing or stopping the rate hikes. Okay, that was the reason there came this the very heavy manipulation, this upward movement. But now the Feds have said that no, there is no point of pausing, or there is no point of stopping, or there is no point of cutting down the interest rates. Okay, rather they are going to rather they will be aggressive, and they will be raising the interest rates back to back. So that is the reason why these big ones, the market manipulators, they are fearful. Because see, if they manipulate the stock market and if they try to move it up, in that case what will happen? On any day there can come a comment that this the government official or the person or this the note, it will say that feds are going to raise the interest rate by like 100 bps, or something else. Means not just about the interest rate, but about something else. In that case what will happen? That because these are market manipulators, they have manipulated the market and they have moved the S&P 500 up. Now because of that particular news, if they want to exit, in that case they will not be able to exit. So again, remember that volume is the weakness of the market manipulators. Volume is the weakness of the hedge funds or these the big players. So they can move up, that's not a big deal. But when it will be time to exit, an instant exit, they will not be able to exit. In that case, they will have to accept the losses. Okay, that is the reason why they are not driving the market up. They have already driven the market up. They have already driven the S&P 500 up to August 16th, but now you can see a bear movement, and the reason is this, the volume. They are fearful that they will not be able to exit in time, and then they will have to see the losses. That is the reason why they are very much careful. They are not going to, and this is why I'm saying that the third scenario, about the manipulator scenario, I am not much confident that there will be a manipulated scenario. Okay, as of now, whatever the conditions prevailing in the market, in the overall stock market, in the economy, okay, these the big ones, they are fearful, and they will not, and they would not like to take any chances. Okay, so that is why let's stick to the scenario 1 and the scenario 2. That's it. Okay, that is the fall, that fall and fall, and then this the upward movement. So any upward movement, a little bit upward movement, yes, that is possible, but an upward movement like 3%, 5% means the manipulated movements. So that is as of now, out of picture. But if it comes for some reason, then I will update you through this the daily analysis of S&P 500 or the community notes, if you are my community member, if you are my YouTube community member. So yes, a little bit upward movement, okay, like 0.5%, 0.3%, 0.75%, etc. That is possible, and that kind of upward movement will simply help these the market manipulators, because even a little upward movement, it will simply create panic as usual among these the retail traders. And the retail traders, they are impatient. Okay, they are fearful. The FOMO is applied there. The rat race is applied there. So these are market manipulators. With even a little upward movement, 0.5% upward movement, they will be able to trap more retail users, and then they will be able to sell comfortably. Okay, so a little bit upward movement like up to 1%, that is acceptable, not a big deal, Okay, so let's stick to the scenario number 1 and 2, and whatever I have told you, that this is how we are expecting the S&P 500 to come down. Okay, this either there will be a direct fall, or there will be or there will be an upward movement and then there will be the fall. Okay, so there are these the bearish sentiments, and on Monday just one more red candle, or just one more very small candle, okay, it will simply change the direction of the MACD. And when MACD and the stochastic RSI, they will be bearish, then they will bring down, and then they will pull down the S&P 500 into the bearish zone. So guys, once again, if you have not joined my YouTube community, my YouTube membership, then you can join my YouTube membership to get the daily analysis of S&P 500, daily updates of the S&P 500, so that you can trade wisely, you can trade carefully, and you can trade safely. So I've given the link in the description and also in the comment section. You can take a look. Other than that, guys, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon, so that whenever I upload this the weekly technical analysis, or any snippet of the daily analysis, or any other informational videos like S&P 500 manipulation, okay, or the technical indicator, so you will get an instant notification, and you'll be able to learn about this, the movement of the S&P 500, about more and more about the S&P 500. So guys, don't forget to like, share and comment. So guys, this was my S&P 500 technical analysis from August 22nd, 2022, that is Monday, to August 26th, 2022, that is Friday.